welcome back. You're watching Buy Now, Sell Now, and let's get connected with the management. We are going to be talking about EPACK Durable. Weak set of numbers for Q4 reported. Revenue down almost 8% at 591 crores. PAT at 2 lakhs. EBITDA down 66%, almost at 24 crores. And EBIT margin at 4% versus 11%. But then what's going to be the medium-term growth outlook, and what are the expansion plans, and what could be the reasons behind these numbers? Let's get connected. We are joined by Mr. Ajay Singhania, MD and CEO EPACK Durables. Hi, good morning and welcome to the show. So in the con call, you highlighted potential EBIT margin pressure of 500 to 1,000 bips due to delayed cost pass-through. By when do you expect margins to normalize going ahead now?
Okay, so we believe that the structural drivers for EBITDA margin improvement over medium terms are intact. Increasing localization efforts, reducing the reduction in import-related costs, backward integration of components, what we have done is adding definitely value. And the efforts in terms of the revenue mix model, a reduction in the overall dependence on AC and ramp up of SD, LD. So all these levers we see that have definitely added value to the overall EBIT. And the company has demonstrated the improvement in EBITDA margins and EBIT margins in FY24. FY25-26 being an exceptional year, there were certain other levers which wherein the AC degrowth has been phenomenal, but at the same time, the overall revenue mix, if we see, demonstrates the kind of efforts we have done to recover by growth in SD/LD. So overall, if we see for a medium to long-term horizon, all the levers are intact, and returning to or exceeding the normalized levels is definitely on the way.
Right. Mr. Singhania, also, how much of the commodity and forex inflation has already been passed on, and what portion still remains to be recovered?
So largely based on our contracts with most of the larger brand customers, these are being done with a regular frequency. So typically we have a frequency of quarterly adjustments of the commodities and forex. Looking at the kind of increase, especially in commodities, copper, aluminum, and the forex jump, which due to geopolitical situations have been extremely abnormal. We have been passing on regularly and at regular intervals, and in certain instances, we have passed them even in between the pre-decided intervals. So like we were able to recover a lot of the input costs even in March beginning, whereas as per norms it should have been in April. So that way, the brands are accommodative and they understand that certain conditions are beyond normal control. So we have been passing them on a regular interval. Having said that, the kind of volatility we see currently in forex, definitely that is uncalled for, and that is something which we cannot be predicted. So in a medium or in a very short term, we could see certain like a 500 to 0.5% to 1% adjustment. But overall, in the long term horizon, we'll see most of the cost being passed on.
All right, let's talk about inventory. Now, inventory days increased sharply from 90 to 130 days. How much of this increase is temporary, and when can we expect to unwind in maybe Q1, Q2? And how are you looking at expanding aggressively going ahead?
So definitely, yes. So the increase in inventory, what we see as of end of March is definitely one number, wherein we are looking at April, May, June, the coming quarter, which was ahead of us in March, being the peak quarter or the best quarter for manufacturing. And therein 14th April was the cutoff date wherein the BIS for AC would have kicked, for the compressors would have kicked in, and the compressors import would have become impossible. And as a country, we still depend for 45 to 50% of compressors are imported. So we had to stock large amount of compressors ahead of the upcoming manufacturing peak season. So this is what led to the increase in the compressor stock and especially inventory as of the end of March. Definitely, as we are working through a good season in the current quarter and the demand is picking up, the inventory levels in the trade are normalized largely. So most of the inventory is getting liquidated as we talk, and we believe that by end of Q1, the inventory levels would be normalized.
Right. Also, Mr. Singhania, can you also elaborate on the scale-up roadmap and the revenue contribution expected over the next 2 to 3 years from this?
So in terms of the revenue, yes, there was a degrowth in AC, roughly 33%, but our SDA, LD helped us recover. So that grew multifold, almost approximately 60%. Overall, the non-AC segment growth was there. So with the current medium term to long term horizon, if we see, the headwinds are over and the tailwinds for AC still continue. The AC industry is expected to grow at 12 to 15% year on year, definitely for next couple of years. EPAC is destined to outgrow the industry for AC, and at the same time, all the other non-AC businesses where we are focusing will help us grow further at multifold. And the objective here is to kind of rationalize the revenue stream during the Q2 and Q3 of the year, wherein the AC season is over. So the objective here is to have a uniform revenue stream throughout the 4 quarters, and that will definitely help us utilize our capacities, utilize our assets much better, and thereby help us not only average out the cost, but also have a healthy EBITDA and ROE, ROCE.
Okay, you mentioned no impact from China-related policy developments. Could you elaborate on the current regulatory structure of the JV and any potential risk investors should monitor now?
So since the JV is not a financial JV, it's more of a technical JV. So currently, the EPACK Manufacturing Technology, the wholly owned subsidiary of EPACK Durable, is 100% owned by EPACK only, wherein it is a dedicated manufacturing facility for Hisense. So currently, Hisense is not participating by way of any shareholding in this company. They have a right to take 26% equity in future whenever they want, but currently there is no financial JV, so it's only a structural and a technical JV, and it is being used to manufacture all the products which are being sold under Hisense brand. So there is no impact of any China policy going forward as of now.
Right. And finally, you had also mentioned FY25 PLI eligibility of 57 odd crores. But the accrual reversal due to growth shortfall, what specifically led to this shortfall versus the targets? And is the reversed PLI accrual permanently lost, or can it be recovered in the subsequent years?
Okay. First of all, we have been doing an accrual of PLI quarter on quarter for last 15 quarters, out of which last 12 quarters or last 3 years, we have successfully received the incentive from the government. In the last financial year, FY 25-26, we accrued almost a sum of 32 crores as a PLI income recognized during those 3 quarters. And we were destined to get almost 56.5 crores during the whole year of FY 25-26. However, in last quarter, looking at the degrowth of AC, wherein most of the eligible components attributed to PLI fall, we thought it's better for us not to recognize this benefit as of now, unless the numbers are finally the due diligence is complete and the numbers are validated by the department. So it's a cautious call we have taken not to recognize those benefits as of now, unless those are certified and validated by the involved agencies. So till then, we will be very cautious in making any statement around PLI incentive for the last financial year.
All right, Ajay Singhania, thank you so much for joining us and giving us all the details on the Q4 numbers. Thank you.
Thank you so much.
All right, but then